Okay. So, good afternoon, everyone. A very warm welcome to everyone attending the Shanti Spintex Financial Year 25 earnings conference call. So, we have with us on the call today Mr. Rikin Agarwal, Managing Director of Shanti Spintex. Please note that the discussion today may include certain forward-looking statements and therefore must be viewed in conjunction with the risk that the company faces. So, now I hand over the call to Mr. Rikin for his opening remarks. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Shanti Spintex, I extend a very warm welcome to all of you joining us today for our maiden earnings conference call. It is a proud milestone as we initiate this journey of greater transparency and open dialogue with our valued stakeholders. The financial results and earnings presentation have been uploaded to the exchange, and I trust you have an opportunity to review them. FY25 has been a landmark year for Shanti Spintex, marked by our highest ever annual revenue, full capacity utilization, and significant strides in operational and strategic execution. Revenue for the year grew by 40% year on year to 710 crores, driven by healthy volume growth and a favorable product mix. EBITDA and PAT for FY25 stood at 20.38 crores and 10.2 crores respectively, reflecting stable profitability and a strong top-line performance. Our journey began in 2010 as a fabric trading enterprise, has evolved into a fully integrated denim manufacturing business. Today, we operate at full capacity, producing 19.2 million meters annually, with a sharp focus on quality, innovation, and sustainability. Our manufacturing setup includes Sudokoma airjet looms and a high performance of Dobby looms, complemented by responsible practices such as use of recycled yarn, sourcing over 50% of our energy from renewable sources. This year's strong financial performance also reflects our prudent working capital management, a favorable working capital mix characterized by improved receivable cycles and tighter inventory controls, has materially supported internal cash generation, enabling us to reduce our net debt to equity ratio to 0.14 times. This disciplined approach to capital allocation not only strengthens our balance sheet but enhances our financial resilience. On the commercial front, our strategy has centered around acquiring and nurturing a stable base of customers. By deepening customer relationships and aligning on long-term value delivery, we are creating a loyal client base, providing us greater pricing flexibility and the ability to pass on cost variation in upcoming quarters. Looking ahead, Shanti Spintex is well positioned to capture emerging growth opportunity. Our forward integration into a finishing unit in H1 FY26 is expected to enhance design agility, improve margins, and bring us closer to the end customers. In parallel, a backward integration project with a dyeing unit in FY25 will bolster our control over quality and input costs, supporting end-to-end operational efficiency. Sustainability remains central to our vision. We are accelerating investments in renewable energy infrastructure, aiming to reduce power cost and reinforce our identity as a progressive, environmentally responsible denim manufacturer. With that, I conclude our update and now open the floor for questions and discussions.
Sir, I think we'll wait for a minute until the question queue assembles.
No issue.
Yeah, so I think Mr. Satyam, you can go ahead with your question.
Hello, am I audible?
Yeah, you are audible.
Yeah, I have a couple of questions. So first is, how is the demand scenario in US and Europe compared to last quarter? Have you seen any improvements in demand from global retailers?
Good afternoon, Satya. Basically, in the USA and UK, Europe side, the demand is better. Mainly, we are into domestic markets. but indirectly we are benefited from the export markets. So definitely demand is better comparing to last year.
Okay. My another question is, what is the impact of Bangladesh textile sector disruption on Shanti Spintex? Do you see any India benefiting from the shift in orders from Bangladesh to India?
Definitely many orders from big brands have been shifted to India. So Indian garment exporters are gaining good benefit from it. So indirectly, we are getting demand generated from the Indian garment manufacturers. So the fabric business in denim is definitely benefited from the Bangladesh issues.
Okay. And my last question: how will the UK FTA influence our pricing strategy, product mix, and market share?
So the FTA on the apparel sector or on UK will benefit by 8 to 12%. Earlier, there was duty of 8 to 12% on the garments which were being exported to UK. So now, definitely, India has an upper edge. So it will be more price competitively comparing to China and Pakistan. So definitely, Indian exports will increase. Right now, the current share of Indian apparels is around 5 to 6% of the UK market size in the apparel. So it should increase in the coming months, and it should follow. So definitely, there will be a good demand in textiles in India also.
Okay. Okay. That's all my question. Thank you.
Yeah.
Thank you, Mr. Satyam. So next question we'll take from Mr. Mukesh. So you can go ahead with your question.
Yeah, hi.
Thank you.
Am I audible?
Yeah, you're audible.
Yeah. So first of all, would you please throw some light on the current result? Why the profits have dipped?
Right. So if you see the results, see we have able to achieve a strong growth in our top lines. So in order to achieve this top line, we have compromised on our pricing of the products, and also we have been very strict, and we have done more control in our debtors days. So receivables, we are able to receive our reduce our receivables. Also the inventory, if you see, so the number of days inventory which we are carrying has been reduced.
Mm-hmm.
So that's why we have passed on the price benefit to our customers. So there is a little bit impact on the profitability of the company, but
Okay.
the top line is growing.
Okay. So going ahead, like where should we see our margins?
See, if you see our results, and in today board meeting, we have concluded an acquisition for our finishing unit.
Mm-hmm.
So it will be a forward integration for us.
Mm-hmm.
So basically there is a three steps in denim manufacturing. One is the dyeing unit, then it comes to weaving, and then a processing unit.
Mm-hmm.
So at present we were only standalone. We were having only weaving unit with us.
Mm-hmm.
So
Mm-hmm.
after this acquisition, a consolidated profit of finishing and processing will be added to our balance sheet. And so definitely there will be a enhancement in the profit also. So by
Mm-hmm.
acquiring this unit, we see around a profit increase of around 5 to 6 crores from this finishing unit.
Okay. Okay. And how much capex we are like? How much money we are putting in this?
So for acquiring this, we are for acquisition of the equity, we are paying around 4 crores,
Okay.
and the company will be putting another unsecured of 5 crores. So around the investment will be around 9 crores.
9 crores. And you are saying that it would benefit us in the range of 4 to 5 crores per annum.
Around 5 to 6 crores we will be benefiting in terms of net profit.
Yeah, net profit. That is great.
Yeah.
Wow. So going ahead, like if we see the pet margin, like right now the pet margin in H2 is 1%, and in H1 it was I think around 1.75.
Right.
So what kind of pet margins we should expect in the coming year?
See, in if we talk about FY26, so
Mm-hmm.
it will be somewhere PAT margin about 2.5%.
Okay.
And in the coming years, we are also planning for a dyeing unit. So by FY27, it will be somewhere around 3.5 to 4%.
Okay. Okay. Okay.
Yes.
Okay. And uh, Like in the last call, you were talking about the solar power capex. So is it done or is it going on?
So the solar power capex is not yet completed. In between, we have taken up this opportunity for this acquisition. So yes, power project is in an upcoming. It will be done in this financial year or maybe by FY27.
Okay, okay. And you're also thinking about putting dyeing unit capex. So where does it stand now?
So we have already acquired the land for that project.
Mm-hmm.
So we are in at we see to be operational in the next 15 months from as of now.
Okay.
Yes.
How much capex would be
So
required?
capex will be is required around 60 crores or so for that dyeing unit.
Okay.
And the profitability we are eyeing around 12 to 13 crores of net profit increase with the dyeing unit. So basically it will be a total composite unit.
Okay. Okay. And from where this 60 crores would come, like debt, internal accrual, what would be the...
So major part will be from internal accrual and somewhat will be a debt or a mix of an equity, preferential issue or a raise from the equity.
Okay. Okay. So, in the coming year, in that case, if we are not increasing any revenues, uh, our profit could grow like 3x in that case, easily, maybe more than that.
Yeah, definitely. We are saying the net profit will be 3x from here by FY27.
That is interesting. Hmm. And right now, what is the current capacity utilization?
The current capacity is around 89%.
89%. Okay. So now very soon, like we will be in full capacity. So what are the plans going ahead?
So the as I said, the this we have completed the acquisition. So
Mm-hmm.
now we will be targeting in increase in the profitability of the company because at present the profitability is low. So we are working on it, and that's why we have done this acquisition and also the dyeing unit. Once this is done, we will go for more capacity increase in weaving also.
So we can say that our capacity will not increase in upcoming 2 years. It will go up after 2 years.
Yeah, there will be some increase in the revenue because of this dyeing and finishing unit.
Mm-hmm.
So you can see a 10 to 15% of increase in the revenue. But yes, definitely there will be more focused on the profitability increase.
So this processing unit and this dyeing unit, this will also be used for some other works like apart from backward integration, outside work.
Outside job work, you mean to say? You can say 15 to 20% of the capacity will be for outside. Rest it will be for in-house only,
Okay.
for captive use only.
Okay. Okay, sir. That's all from my side. Thank you and all the best.
Thank you, Mukesh.
Thank you, sir. I think we'll take the next question from Mr. Harshit. You can go ahead with your question.
Hi, hello, sir.
Hello.
So my questions are somewhat already answered. I'll just still maybe it'll be a bit repetitive, but sir, can you just give me the number on what's the amount of capex that is forward integration and what's the its backward integration? If you
So
look at it that way.
okay, so the amount it will be around 8.5 to 9 crores for this processing unit, which is the forward integration for us. And for the backward integration dyeing unit, the capex will be around 60 crores,
Okay, so overall capex is 70.
70 crores, yeah.
So and out of the 70, we are major financing is by internal accruals. That will be a smaller part of it.
So at present, the debt on the company is, if you see in the results, it is around somewhere around 10 crores.
Right.
Right. And already in this month of May, I think we will be, this debt will come to around 2.5 to 3 crores because we had some portions in the fixed deposits in the current company which is having. So we will be paying our short-term borrowings from that. So the debt at current will be around 3 crores. And the unit which we are acquiring, Tista Spintex, it is having a debt of around 8 crores.
Okay.
So that
Okay.
we are not increasing much. So for acquisition of this unit, we are not taking any debt, new debt for this.
Okay. So, sir, can you just know what will be the like peak debt to equity when on in the ongoing capex that you are planning that we won't go beyond this number?
So if for the dying unit, if we say, if we take a debt of new 30 crores, so somewhere around 35 crores will be a peak debt. Yet
Okay.
we are not finalized that we will be going for a debt or an equity option. But if we go for a debt, so it will be 35 crores. So you can see somewhere around 0.35 of the debt equity ratio, which
Okay.
is at present 0.14. So somewhere it will be around 0.35 maximum.
Okay. Okay, sir. Thank you, sir. Got it.
Yeah.
Thank you, sir. I think we'll take the next question from Mr. Ajit. Uh, Mr. Ajit, you can unmute and ask your question.
Thank you for the opportunity, ma'am. This is Kainas from ULJK. So I had a few questions. What is the cotton yarn spread and how does it compare to last year? Landed cost of US cotton future, and have you substituted the domestic cotton with imports? Some other questions as well, yeah.
Thank you so much, ma'am. So the US cotton is landed cost is around 7 to 8% expensive than the Indian cotton, because there is a import duty of around 10% for the import duties. So at present, hardly you can see 2-3% of the consumption is being imported from outside India in India at present. Basically, cotton is little bit African cotton is being imported, from outside India, because the
Okay.
quality of African cotton is better. So people are importing little bit amount of African cotton.
Okay.
And the cotton yarn, we see that it will be more stable this year, because in the last 2 years there was already we have seen correction in cotton yarn and cotton prices. So we are expecting the cotton yarn to be stable, cotton and cotton yarn prices to be stable for next 1 year.
Okay, sir.
Yeah.
Can you? Yes, please.
Uh,
So, um, I think we lost him.
am I audible?
Yeah, you're very much audible. I think till the time he kind of reconnects, I'll take the next question from Garima Singhal.
Yeah, hi. So am I audible?
Yeah, you're audible.
Yeah, so my first question is, does the company plan to export? If yes, so which geography are being targeted for future export growths?
Definitely, we have plans to go for export in next coming 1 or 2 years, and the export market which we are looking is Cambodia. Colombia is a good market for denim. South America, Mexico, they are the good markets for denim export. Also, a little bit quantities being export to Egypt.
Okay. So what is the revenue mix you want to maintain when it comes to domestic versus exports in coming future?
So in coming future, we see around 5 to 10% of the revenue coming from export, but not a significant amount.
Okay. And the next question is, what percentage of revenue comes from value-added fabric?
Value added fabric, if you see, we are making most of the value added fund, right? If you can see that 70 to 75% revenue is from the value added products.
Okay. Last question is, what is the long-term plan for customer segmentations and product positioning?
So at present, we are working with the dealers in Gujarat. So long term, we are focusing maybe from this financial year, or so we will be eyeing more dealer network in Delhi, Mumbai, Kolkata, and Bangalore also.
Okay,
Yeah.
that's all from my side.
So we'll take the next question from Vaibhav Kapoor.
Yeah, hi. Good evening, sir. Uh, so I was just looking at your investor presentation, the slide number 6 and the slide number 10. And what I'm trying to understand is that your capacity utilization from financial year 21, which was at around 29%, has gone to 89% in this financial year, whereas your EBITDA margin has gone from 10% to 2.8%. So there has been a steady increase in your capacity utilization, and there's been a steady decline in your EBITDA margin. Now, I want to understand, what was the business developments that happened during this phase, and if you could give some understanding of how we should understand this margins and the margin decline.
Good evening, Vaibhavji. So if you see the capacity utilization has been increased gradually. It was earlier 40, 60, then we are now able to reach by 89%. So there is increase in the revenue. But in order to increase this revenue and in order to sell this, we have seen some pressure in the prices. So we are not able to get the prices what we wanted. So we have given the prices, good prices to our customers, and that's why we have retained that orders from our customers. So indirectly we were able to get the orders from the customers in compromising some price comparing to our competitors. Also, we were little bit strict on the payment policies. That's why we have given them better prices and cash discounts for the payments. So that's why the EBITDA margin is, if you can see, has been declined comparing to the what it was in previous year.
No, I somewhat get that, but just to take this point a little forward, see, if you take FY21 as the base, there is just a 29% utilization and you have a 10% EBITDA margin, which right
Right.
now is just 2.8%. So there's almost a 70% decline in margin, and your capacity is just a reverse. It's like from 30 to 90. So I do get the argument that in order to increase the sale, you will drop the margin. But at what point do you draw the line saying that this is the return on capital that you would expect, and this is the steady state margin. You did give some elaboration that 2.5% would be the net margin you're expecting, but given the trend that I just elaborated, and currently your net profit being 1.4%, I also don't understand how will it go, how will it be going forward. So just if you could stress or give some
Uh,
better explanation.
so in what happened in FY21, we were not making our own fabrics. There was most of the fabric was made for on the job work basis. So the sales and the revenue which you see was coming from the revenue. That's why the percentage of profit was better if you see, because the revenue was coming from job work sales also and contract manufacturing. Now we are not doing any job work sales and contract manufacturing. So there is a total revenue. If you see, we are making it, we are making our own fabric and selling it in the market. So there is no portion in the job work. So that's why the percentage drop is there in that.
So are you trying to say that the trading arm has a better margin profile in this line of business?
I am not getting your question.
So
Trading
so
now?
see so see very simply, if you're saying that FY21 there is a 10% EBITDA margin, correct?
Right.
And you're saying that that was a time you were doing more trading activity and there was not much manufacturing
No, no,
done.
we were doing manufacturing, but we were doing manufacturing for other. So in that only a sale of service invoice was generated. So that's why the revenue, if you see, was less. So
Okay.
basically we were getting yarn from the other and we were converting it into fabric and giving it back. So it was job work. If you see the service revenue, if you say.
Okay.
So
Okay. And was
revenue was
this
not that time. You cannot see the revenue.
okay? And what was this job book portion in FY 22, 23, and 24, if you could give some understanding.
At present, it's not handy with me, but it was I think it was very minimal. Not any material in 23, 24. It was not material.
Okay. And so just the last part where you're saying that the current FY 25 closing net profit margin is 1.4%, but you're looking at 2.5%. Could you just explain how would this work out and how do we understand the margins in this business?
So see, the increase of around 1% will be coming from this acquisition. We have done an acquisition of this finishing unit. So we are expecting profit of increase of profit from 7 to 8 crores from this finishing unit.
Okay.
And definitely we will be saving some cost in our transportations also, which we were sending outside earlier.
Okay. So what you're saying is that the long-term steady margin for this continuing business, not the new integration that you're doing, is around 3%.
The 3% is for
See, your
FY,
yeah, so your FY 25 EBITDA margin is 2.8%,
right?
right? And you're saying that once you get this new unit, that will add about 7 or 8 crores. So
Yeah,
that
7 to 8 crores of
yeah.
net profit. Yeah.
So that means that the steady state margin for this weaving unit is around 3%
Yeah,
going forward.
yeah, and somewhat we can see some price impact improvement also. So yeah, around 3.5% you can see the EBITDA margin for weaving unit, standalone weaving.
Okay.
And if you see,
And this is the long-term trend, or this is just, I mean, uh, I just want to understand the variance that happens in this EBITDA margins and EBITDA over maybe a 4 or 5 year cycle.
so
That's
maximum,
the
if we see that everything is according to us, then I think it can go to 4.5% of EBITDA in the weaving segment. If you see it as a composite as a whole unit, whole unit as a composite unit, it can go up to 7 to 8%. But only weaving is around, if everything is fine, then it will be around 4.5% maximum.
okay. Okay, that answers my question. I'll just join myself back in the queue. Thank
Yeah.
you.
Thank you, sir. I think we'll take the next question from Mr. Satya Mehta.
Hi, thank you for taking my question. Rikin bhai, sorry, I joined a little late. Wanted to understand the business a little better. So if you can tell me, I understand what we manufacture, but who do we sell to? Who are our main customers? That'll be easier to understand. Then I have 2, 3 more questions, but if we can start with that.
Yeah. Good evening, Satyaji. So, see, the main business activity is that we are manufacturing denim fabrics. So, how is the fabric manufactured? So, we have to buy yarn from the suppliers, so which they are available in Gujarat itself. Lot of spinning mills are there in Saurashtra, Rajkot, and even in Ahmedabad region also. So, we buy yarn from there, and then this yarn is sent for dyeing. So, basically, a indigo dye or sulfur, other colors are getting dye on this yarn, and then it comes in a beam form to our unit for weaving. So at present at Shanti Spintex, we convert this yarn into fabric, which is the weaving activity. Then further it requires to be sent to a processing unit in which the this fabric is finished, more softness is added to the fabric, stability and shrinkage and skewness is being controlled in the finishing unit. Then it is sold to the dealer network. So we are at present we are having our dealers in Gujarat. So these are the unorganized dealers. We are not selling it to brands at present. So they are the traders or dealer you can say in Gujarat. So we are selling it to them.
Right. And ultimately then from the dealers, it'll go where? These
So,
dealers.
so dealers they sell it to the garmenters. There are big garmenters and small garmenters also. So we sell good quantities to, like we take orders of 2 lakh meter, 3 lakhs meter from this dealer.
Right.
Then further, they sell it 5,000, 10,000 or smaller quantity to the garmenters, and their payment cycle is also little bit on a higher side to the garmenters.
Right. And what visibility do we get for future sale, manufacture, etc. from these
Visibility
dealers?
for?
These dealers, if they give you large orders of 2-3 lakh, quantity, then
Yeah.
what's the timeline for this? So you have to supply this in what timeline?
So most of the thing is we are making fabric by our own understanding and our own research and product development team. So what we do is we have our products ready with us. So we distribute those samples in the market to our dealer network. So they get orders for that. Generally, our lead time is around 15 to 20 days.
Right, right. Got it. And one other question I had was, in your future plans and ambition, where do we see ourselves in the next 2-3 years? I heard the part on profitability, but what about the top line and how do we plan to achieve that?
So top line, if you can see, is you can see a growth of next around 15% or so in the top line. So
Hmm.
because we will be adding this processing unit and the dyeing unit, which will be a backward integration for us. So the revenue is will be around 10 to 15% growth, but definitely the profit which we are lagging behind, so it will increase that. So the profitability, net profit we are eyeing around 30 crores by FY27.
Right. Got it. Got it. And sorry, for this 10 to 15% growth, you are saying this is anything different we are doing compared to what we've been doing in the past
No,
for
this will be this only for fabric sale only.
fabric sale only and through
Yeah.
the distributor dealer network?
Yes, yes.
Got it. Okay, thank you. I'll fall back in the queue.
Yeah.
Thank you. So we'll take the next question from Shweta BK. You can go ahead with your question.
Yeah, hi. Thank you for the opportunity. I wanted to ask you, are we uh, putting ourselves in participating in any PLI schemes or something as of now?
So, as of now, Shweta, the PLI scheme is for the polyester. It is mainly for man-made filaments and man-made fibers. So, for cotton, as of now, the PLI scheme from the central government is not there. And for man-made filament and fiber, it is also for a very big investment. So, the many SME players or large corporates doesn't fall for that. So big corporates like Alok or Reliance, it is for basically it's for them because the project side is needed is around 1,000 to 2,000 crores for the PLA.
Okay. And I
So
want,
definitely some state governments are giving incentive, Gujarat governments. So we will be eligible for that. Like so Gujarat state is offering interest subsidy and some pricing in power also they are giving subsidies.
so are we taking advantage of that right now?
At present, we are taking advantage. We are for this new unit, we will be getting an advantage for Tista Spintex for interest and power. For Shanti Spintex, our subsidies for interest and power is over. It was for initial 5 years.
Okay. And whatever we've acquired, you were mentioning right now, we've acquired some new plant or something. I wanted to know how have we funded it and it's come at what cost?
So for acquiring this, we'll be paying 4 crores for the equity portion, and around 4.5 crores for unsecured loan, which the existing company was having. So it will be replaced from Shanti Spintex. And somewhere around 8.5 crores is the existing debt in that company. So it will come along with that.
Okay.
Yeah.
And for the, like, the government has recently given advantage for UK India partnership. So will we be part, like benefiting from that in any way?
So definitely indirectly many apparels order will be shifting to India as India will be more now 10 to 12% competitive comparing to other countries. So many garment orders will be shifting to India. So indirect for making apparels, the indirectly definitely for this value chain we will be getting advantage. So we will this fabric will be sourced from India.
Okay, got it.
Yeah.
Okay, thanks a lot. I'll keep a watch. And if I have any questions, I'll come back in the queue.
Thank you so much.
Uh, Thank you. We'll take the next question from Mr. Vaibhav Kapoor. I believe Mr. Vaibhav, you're on mute. Can you please unmute yourself and go ahead with your question?
Yeah, sir, I was just trying to understand this unit that you have acquired. You're saying you spent about, I mean, 8 crores in debt and 5 crores in equity. So you'll be paying about 13 odd crores, and you're saying there'll be a 7 or 8 crore jump in profit.
Yeah.
And is this an entire holding belonging to you? I mean, the promoter family, or how does it work?
So, yes, so what happened? This unit was there, it was established last year. So the commercial production started from FY 24, right? So earlier I was having a 40% stake in that, and 60% stake was outside. So what it was there that we acquired the balance 60% in this April only from the other promoters. And now we are in order to ensure that there is no diversion of interest, we are shifting 100% equity to Shanti Spintex now.
So Shanti Spintex will acquire your entire shareholding,
Yeah,
which is 100% owned.
definitely, yes.
Okay. And how did you arrive at this valuation?
So
I mean, yeah.
we have taken a value from a certified valuer. They have given a report of valuation, and the valuation is very nominal. Like it's like hardly 1 crore than the book value.
Yeah, that's the follow-up question that I had, that it seems to be that you could have, probably had a higher valuation as well. And I mean, 1 crore seems great for us, but isn't it too reasonable in that sense, if I
See,
may?
because there it was a related party, so we didn't wanted any questions or anything to be raised. So that's why we prefer to transfer it at a cost or a hardly some margin on that, nominal margin.
Okay. Okay, that was nice to hear. All right, I just joined myself back in the queue. Thank you so much.
Thank you, sir. So we'll take the next question from Satya Mehta.
Thank you for the follow-up, Rikin bhai. So two questions. One is the dealer distributor network that you're talking about, that we sell to. What is our typical wallet share with those dealers? Do they? I'm guessing they also procure from other manufacturers.
So it's difficult to get out that how much they are buying from us and from the other manufacturers. But definitely we are working with our customers. So I can say we are working around 70 to 80% of their business is being sourced from us. So in terms, because we are being very, we are able to give them good service, what they require. We are having more customer centric approach, and whatever the quantity they want, so we are able to supply them.
Got it. So, and Rikin bhai, for growing, then are we onboarding new distributors to our network, or we are trying to capture more share from the existing distributors only?
So at present, we have from the existing distributors only we are getting the more business. We have not tried to approach more customers because there was a scope to increase our share in this with these dealers only.
Right.
So definitely once we think we have reached their capacity, so we will explore more customers, more dealers also.
Yeah. No,
Because
sorry.
increasing more dealers, so there is a competition within them.
Right, right. No, but sorry to probe on that. If we already have a 70-80% market share with a given dealer, then growing share over there is difficult, right? And so how are we?
So that's why we are focusing now. We have captured the dealers from Gujarat. So now we are focusing dealers from Delhi, Mumbai, Calcutta, and Bangalore. So that will be a different region altogether, and there will be no competition in the dealer network also.
Right.
Right.
Got it. Got it. The other question was, sorry, this backward integration point you mentioned, and I missed the initial 10-15 minutes. If you've already spoken about it, sorry for that. But if you can explain that a little bit, how are we planning the backward integration and how it will impact the top line
Right.
and
So the backward integration is we are doing on the adjacent land only, where the existing manufacturing facilities located. So it is around the area is around 38,000 square meters, and we will be setting up a dyeing unit indigo dyeing range and other machineries. So basically the yarn which we are getting outsourced, so dyeing which we are outsourcing, so we will be doing it in-house, and the capex for that will be around 60 crores, and the profitability which we are expecting from that is around 12 crores.
Right. Got it. And so this will not impact the top line, right? This will have a impact on the bottom line only.
Not much of the top line will be impacted by this, because the outsourcing or the job manufacturing will be hardly 10 to 15% of it.
Right.
Yeah.
Got it. Got it. Understood. Understood. I'll fall back in the queue. Thank you.
Okay.
Please raise your hands in case you have any questions. Rikin sir, we'll just wait for another 1 minute. Otherwise,
No
we can.
issues.
Yeah. So I think Vaibhav Kapoor, you can go ahead with your question.
Yeah, sir, you've told about the solar project that you've put on hold. If you could just explain the amount of capex that you are going to do and what cost savings would have come, and what date do you plan to think about that project?
So for solar, the main reason for delay was, otherwise we would have completed earlier. There was some not some clarity on the from Gujarat government side, that how we will they give the net metering, or how much benefit they will give to the unit by putting a captive. So in last before 2 months only we got that clarity. So the project capex is around 7 to 8 crores for solar, to able to reach 90% of our power requirement, and the saving will be around 2.5 crores.
Okay, saving be about 2.5 crores. And what is the capacity of the solar plant?
So for solar plant, this will be around 2.5 megawatt.
Okay, 2.5 megawatt.
Yeah.
All right, perfect. That answers my question. Thank you.
Thank you.
So Mr. Satya Mehta, you can go ahead with your question.
Sorry. Yeah, thank you. And sorry for the follow-up again on this. You said the 60 crore capex for backward integration. How are we planning to fund that, and over what duration will we fund it, and when will that go online?
So for this dyeing unit will be operational. We are expecting it to be operational in next 15 months. And the funding, some part of it will be from the internal accrual itself, and some part will be from the debt. As of now, we are planning for debt. So around 30 crores of debt, we are eyeing on it.
Right. And in 15 months, it will be online. So you are saying the 12 crore impact on profit that we'll start seeing after 15 months?
Yeah, but not pro rata basis, it will be there. 20 crores is for a full year.
12 is for full year, right?
Yeah.
Right.
So
So is it fair to say that in FY27 we'll likely have a improvement in profitability?
yeah, we can expect six half yearly at least in FY27.
Right. Got it. Understood. Thank you.
Mr. Vaibhav Kapoor, you can go ahead with your question.
Yeah, just sir, follow up on this. You said that around 60 crores would be the capex for this backward integration project, and you're saying 30 crores would come from internal accruals.
Right.
I'm just trying to understand this math, because you're saying that about 7 or 8 crores you'll do, as an acquisition that you're going to pay up right now, and you're saying that 30 crores in internal accruals will happen. Uh,
Right.
so this number, there seems to be a mismatch, because if you look at your EBITDA, it's about 25 odd crores. If you just take your working capital to remain the same for the next 12
Right.
months, right? You will have about 20 crores of cash flow, 20 to 25 crores of cash flow, uh, give or take at best. And out of that, 8 crores is already going to be consumed for this integration. So there seems to be some plugin variable or some figure that I'm not being able to get through.
So Vaibhavji, this acquisition which we have done, we are doing of the profit of this last year, which we ended March 25, right? So we had some cash surplus with us, and we are expecting around 17 crores of net profit in this year.
Uh, right. So the cash surplus that is there, you've yet not done the acquisition, right? So if you
So
take the
we get payments will be done. We have at present that amount has been put in the investments, that surplus amount.
okay, so if you could just explain what is the current net debt that is there and what is the cash on this March balance sheet that
The
you have
acquiring
kept?
unit or the Shanti Spintex?
Shanti Spintex, and then we'll take the acquiring unit.
At present, in March FY this March 25, if you see the debt, bank debt, if you are talking about bank debt, is around 11 crores. That is also short term. So long term debt from bank is zero at present in the March 25.
Okay, so you're saying the bank loan is 12 crores, and what is the current investments that you have kept aside for this?
So the current investment, if you see, is around 8.5 crores.
That is totally there in the current investments.
Yeah, yes, you can see cash and bank balance. So around 8 crores, you can see the balance is there.
Okay. And 17 crores is the net profit plus the depreciation. So about 20 to 23 crores.
23
Around,
crores, yeah.
yeah, around 7 crores is still a
Yes, 7
difference.
crores, maybe we can put in as a promoter contribution or contribution from directors.
All right, perfect.
Yeah.
That gives the entire mind. Thank you.
Yeah.
Please raise your hand in case you have any questions. Sir, I think we'll just wait for another minute, otherwise we'll wrap up. I believe no more questions, sir. So I think you can go ahead with your closing remarks.
Thank you so much, everyone. Ending, we at Shanti Spintex remain confident about the industry future, supported by progressive government policies, early signs of revival, and our strategic focus on cost efficiency, product innovation, and customer centricity. We truly value your continued support and thought-provoking questions, which help us stay committed and forward-looking. We hope this discussion provided clarity and insight into our business. For any further queries or information, please feel free to contact us or our investor relation team at Go India Advisors. Thank you once again for joining us.
Thank you, sir, and thank you, everyone.